with the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. Coming up, we will have half an hour of business news and analysis. On today's show, from economic resilience to tech breakthroughs, how does China's 14th five-year plan drive the country's development? And gold has crossed $4,000 per ounce for the first time. What does this moment tell us about investor sentiment and the broader global economy? And now let's begin with our top story. China is wrapping up its 14th five-year plan, marked by a series of achievements, including a resilient economy and solid steps in technological breakthroughs. From industrialization and economic reform to sustainability and innovation, the country's strategic plan has championed high-quality development, serving as a catalyst for nationwide progress across all sectors. China's economic increment is projected to exceed 35 trillion yuan, or nearly $4.9 trillion in this five-year period, contributing about 30% annually to global economic growth. Over the first 4 years, the economy grew at an average annual rate of 5.5%. So for more on this, joined us on the line now are Professor Qu Qiang from Minzu University of China, Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, and also Yan Liang, Professor of Economics, Willamette University. So Yan, I will start with you. According to the Ministry of Industry and Information Technology, China's value-added manufacturing output is expected to increase by more than 8 trillion yuan during the 14th five-year plan, contributing over 30% of global growth. So help us understand these numbers, and what does this 30% contribution really mean in global terms?
Well, I think what this means is that China really has become the global sort of powerhouse in manufacturing. And on the one hand, this definitely helped to boost China's own growth, but at the same time, it also contributes to global growth as China is able to produce and manufacture, a lot of cost-effective green products and tech products. And this is not just benefiting China, but also really the rest of the world. I think, there are a number of other factors that we could really look into how China's contribution meant to the rest of the economy. So the 30% of contribution to global growth, this means, China is a big importer. It imports about 2.5 or $6 trillion worth of products last year in 2024. So it's a, big sort of demand source for many countries. China also provided, $6.1 billion of development finance for the rest of the world. And again, this helps other countries to also boost their own manufacturing capacity because China has helped to build a lot of infrastructure and really unleash a lot of the potential and manufacturing capacity of the developing countries. China's exports of the low carbon technologies have also contributed to the lowering of carbon emissions of the rest of the world. So I think the long story short is that China's growth not only benefits its own people, but it really also helped the rest of the world to grow faster, but also in a more clean, sustainable way, and help them to upgrade their own economic structure as well.
And Professor Qu Qiang, so during this 14th five-year plan, we've seen a shift from high-speed growth to high-quality development with new industrialization at its core. So how would you assess this overall transformation so far?
Oh, yes. I think we do have achieved this phasal achievement because China is not purely after the GDP growth. And it's trying to transform its labor-intensive economy into this tech-savvy, innovation-driven, and also the green development-oriented economy. And we've been seeing that the holistic view on the value chain has been here. The upgrading of the whole economic structure has been here. And more than that, I think the original coordination and also what we call the big unified market is here as well. So I think this is really interesting, and we have been seeing lots of important development are here, like EV. Right now, China is the number one maker, and also the solar farm and wind farm. Those green development technology are also number one. China also have the largest network of the high-speed rail, and also 5G technology and digitalization, e-commerce. Those things we really have heard a lot, and also I think. These has been defining what we call the quality development as the new productive, forces. This is very important. A lot of people are saying that this has not, only be the achievement of China, and I fully agree with Professor Yan Liang that this is also a very important contribution to the whole world. Well, because China is helping the Belt and Road countries, especially many of the global South partners to develop their own capacity, and many of the regions are focusing on their own version of modernization and also their target of development. You see, most of the root of the current geopolitical conflicts and the wars are happening with, because of the gap of our development. But now, because we're, catching up with the development and to try to bridge the gap with each other, and then the whole world become more peaceful with, with each other, and it's a better place than before. So I think this is not only the quality growth from China, but also the quality growth for the whole world.
And Dr. Zhou Mi, so let's talk about the supply chain resilience. From the pandemic to tariff wars, major economy has become increasingly concerned about the security of their supply chains. So how has China managed its own supply chain resilience in this environment?
Well, in my understanding that in the past 4 years, there are so many important impacts, as you mentioned, the pandemic, and also a lot of the subjective measurements to deal with the supply chain. So as before, China is one important part of the global supply chain, and we are trying to do what we can do to give better support for the manufacturing and also to absorb the products produced by other countries. But in the previous 4 years, I think that the world has changed a lot. We have seen so many uncertainties, and the uncertainties are bringing the people more consideration about how can they deal with the uncertainties. So for one side, I would say that China is the number one country in the manufacturing. So it have a very complete, structure of the manufacturing, and it's helpful for them to just do some complementary change or replace of the supply in certain degree. But in a larger side, I would say China is trying to do that together with our trading partners. The supply chains has been extended to the other countries, and like the Belt and Road Initiative has welcomed so many countries to join us to improve their industries. So this is kind of a very important idea that we are providing a better supplies based on the a wider range geographically. Well, on the other hand, I would say the supply chains are not just stay there. We have so many new things, so many innovative technology. So we are trying to use the technology to reduce the information bias or some kind of disinformations. We are trying to reduce those bad impacts. And in this regard, we are using the technology like the automation to improve the efficiency, to fill the gaps if necessary. Chinese government is also trying to do more to trying to stabilize global governance, like for the WTO issues and also the free trade agreement networks. We are doing these things together with our trading partners also to bring the market with a better confidence on what we can do and what we want to do. So in the past 4 years, I would say from the supply side, China is really our very important pillar, even more important than the GDP contribution to the world.
A lot of progress has been made. At the same time, challenges still remain at home and abroad. And Professor Qu Qiang, so domestically, people have been talking about deflationary pressure, and August CPI fell 0.4% year on year. So does that suggest deflationary pressure is still there, or are we beginning to see the signs of recovery?
Oh, well, I think in the short term, we do see a negative 0.4% of the CPI in August. But actually, if you take a look at the track record, and I think the gap has been narrowed. So I think the curve has been flattening, which means we are hitting a rock solid bottom. So it shows that the market do have a rather weak demand, but we cannot just say it's a deflation. Because if you removed the core elements in our CPI basket, which is food and energy, because you have to understand in our basket of the CPI, the food and energy take such a huge number, such a huge proportion, because China used to design this as a preliminary developing nation. So our Gini coefficient is rather large. Actually, it's larger than now. So if you take away those food and energies, the core CPI actually is about 1% up. So it shows that the service sectors, consumption sectors, actually has been rebounding in the prices. So can we just say it's simply a deflation? I think we still need to have more of the observations on the overall prices and the supply of the monetary environment, as well as for the job market. I think if we can, see most of the overall indicators are getting warmer and better, and it's still early to say we're having a deflation, especially considering the whole world right now is in an inflation environment. So I don't think China would have so much of a chance to be deflation alone in such a whole world.
And yeah, so Professor Qu Qiang talking about services sector, the State Council has announced an ambitious plan to grow the sports industry into a key economic pillar. So do you expect to see rapid growth in this area?
Well, I think so. I think what China has been trying to do is to really boost domestic demand, especially consumption demand. This is part of the dual circulation model, which is very important as a pillar in the 14th five-year plan, and also going forward, I would say. I think service consumption is very important. So the sports events is part of the service economy. As we know that in China, service consumption accounts for about 46% of the total household consumption, and that is relatively low compared to advanced economies. That number is typically 70 or above. So there is a huge room to grow the service sector to boost the domestic consumption demand. And also, I think, there have been a lot of efforts to boost service consumption, beyond the sports industry, and that, focus a lot on various, I would say, living standard enhancing services, such as, childcare, elderly care, healthcare, education, and so on and so forth. So I think these are also important because they're part and parcel of consumption, but they also help to, ease people's mind, reduce some of the anxieties, and allow the households to increase the discretionary spending. And I also think that this meets also the demand, as we see that especially the young generation, they're now really looking for consumption that would help to boost their well-being, to give them the sense of comfort and fulfilling kind of emotional values. So I think that's another way to say we wanted to boost the kinds of experiential service consumption, including sports events. We know that China in this Golden Week of October, there are many sports events around the country. There is the tennis open, there is the world table tennis events, and all of this attracted a lot of the viewers and tourists. So I definitely think that this is the right direction, and I do believe that there is a lot of room to continue to grow sports events, cultural events, and many other service consumption items.
And yeah, so China's economy continues to grow at around 4 to 5%, with exports still playing a major role. So we've seen the trade shift from the U.S. towards other countries and regions like ASEAN and Latin America. So does this signal a new trade pattern? Does it mean Washington's tariff have had limited impact? It didn't do much damage to China's exports as a whole. It just simply changed the composition of the exports.
I believe so. I think, again, the track record has shown that, China's exports remain to be very competitive and strong. And as you are right, the decline in China's exports to the United States is more than offset by China's increased exports to Southeast Asia economies, to Africa, to Europe, and also to Latin American countries. So I think as China diversifying its trading partners and as China continue to boost its trade competitiveness, I do believe that all these tariff war is not going to prevent China from being able to export to the rest of the world. And I think also evidence suggests that it's not just about, so-called transshipments that, basically China ship their goods to a third country and then they export the goods to the United States. There are some of these elements, but I think mostly is that many countries increase the demand for China's products. Again, very cost-effective, high quality, and also keep, upgrading in terms of the products. So I think, China's exports remain very competitive, and I don't think that the U.S. tariff is going to, drag that down. That said, I do think that, there are definitely ways for China to continue to boost its domestic consumption and domestic demand. So to really materialize that dual circulation model.
Well, we're speaking with Yan Liang, Professor of Economics, Willamette University, Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, and also Professor Qu Qiang from Minzu University of China. And after a short break, gold has crossed 4,000 US dollars per ounce for the first time. What is driving this gold rush? Stay with us.
Welcome. I'm Elaf Elad, economics professor and member of the Data Science and AI Center at New York University, Shanghai. On the World Today program, you can find in-depth and impartial insight, as well as critical commentary on key trends in the Chinese economy, financial technology, business, and blockchain. To prepare for the world tomorrow, join me on World Today.
You're listening to Biz Today. I'm Zhao Yang in Beijing. Gold has hit a dazzling new milestone, rising about 4,000 US dollars per ounce for the first time in history. The surge comes among the US government's shutdown and tariffs as investors around the world scramble for the safe havens. From Wall Street to Main Street, the question is the same. What is driving this gold rush, and how long can it last? So, yeah, what's your response to this question? I mean, what are the main factors driving up the gold prices? And what does this milestone tell us about the state of the global economy right now?
Well, as we know that, this is quite amazing to see the gold price, as you talked about, surpass $4,000 an ounce. This is for the first time. And it was below 2,000 just about 2 years ago. So I think what happens here is really this idea that gold has become a really safe haven asset. We already saw, central banks start to ratchet up on their gold reserves about in 2022, 2023, especially after Russia's, foreign exchange was seized by the United States. And that really is a wake-up call for many of the central banks to ratchet up their gold reserves. And so I think that is part of the reasons that we're seeing this relentless, increase in the gold purchases. And given that the gold market is relatively small, it's about 7 times smaller than the U.S. Treasuries. So you could imagine, when these demand increases, that very quickly drive up the gold price. And I think, this year so far, we even see the double down of this trend. Gold has jumped more than 54%. This year. And that's because I think uncertainty has really heightened due to Trump's tariff war, some questions about the central bank's independence in the United States, and now facing a government shutdown in the U.S. Also, there are the concerns about, whether or not the equity market has been overconcentrated and overvalued in those tech stocks. So given all of these, I think it's, not surprising that the gold price has been keep rising. And again, driven mostly by many central banks are increasing their gold purchases. And I think going forward, Goldman Sachs has estimated that on average, the gold purchase would be 80 tons, close to 80 tons per year by the central banks. And, they project that the gold price is going to continue to rise to $4,900 per ton by the end of next year. So it seems that there's a lot of faith in gold right now with the heightened uncertainties in the global economy.
So, Professor Qu Qiang, as Ian mentioned, the gold are up about 50% since the start of this year. So how unusual is it to see such a sharp rise in gold prices within less than a year?
Well, I think we are coming back to another round of economic cycle, which is 60 years, which is a contra Kiev cycle, which the last 1960s, 1970s, we have been seeing exactly the same situation when, the Bretton Woods system is going to collapse, when the Cold War started. And at that time, the gold price has also been soaring up. But also, a lot of people are arguing, well, the gold didn't soar up that quickly back in the 1960s and 1970s. But you have to take a look at another, product, another commodity, which is oil. Because at that time, oil has been shouldered partial of the responsibility of the gold. So basically, oil has been soaring up even more quickly than the gold because everybody need to use oil. Currently, we've been seeing that the oil's position has been much, much lowered. Number one, America has become the number one producer of the oil itself, which means America as the number one user of the oil and the gas now become the number one producer itself. So the oil's necessity has been reducing. And secondly, we've been seeing the renewable energies and all kinds of this new structures of the supply of the energy mix has been popping out. For example, China has become the number one electricity supplier of the whole world with green energy. And also this has been lowering the importance of the oil and the gas. So the oil cannot play as, a very important absorber of the easing money. So gold probably and the silver and other, very precious, metals like the platinum, they've been serving as the new target for absorbing the extra supply of the money. So that's the reason why the gold has been, and also the silver and the platinum has been, going up so quickly. And also, we've been seeing that there's a major change of the world economic structure. For example, the whole world right now has been powered solely by debt. Only with the debt you can issue the money, not like before we have the gold standard, silver standard. Now we only have debt standard, credit standard. And today I think we have 300 trillion US dollar worth of the world debt today. And that cannot be easily removed. So people choose to trust gold instead. And so you see, that's the reason why for the gold rush.
So, Dr. Zhou Mi, so investment in buying metals like gold typically spikes when investors become anxious. So, to what extent the Trump administration's tariff and trade policies fueling this investor anxiety?
Yeah, I think that the tariffs are really a big issue for the people to consider about their decisions. The decisions not only just about the real investment, but also about the portfolio investment. So for the investors, they may consider about whether they can keep the value of their products or assets. So they want to do more to invest in some kind of more stable treasuries, not so safe. So they are trying to buy the gold as a replacement. And another factor I have to say is about the depreciation of US dollars itself. So the depreciation has caused the gold price to becoming even more. So when the people are thinking about the trade, they're thinking about the possibilities on the cost. The tariffs has make it much more costly and uncertain for the people to do the business. Well, in the longer term, maybe they were still considering about the system, the mechanism, the governance, about the WTO. If they are not so confident on the principles, on the governance, they may trying to do instead to do something else. So that maybe the choices, the decisions are so diverse, and I think that is also the reasons why they're not just trying to put the money in United States, in U.S. markets, or just in the treasuries or other kind of assets. They want to buy more things to diversify their portfolio investment.
And Yan, so how much of this recent rally of the gold do you think is tied to the U.S. government shutdown and the tariffs?
Well, I think I agree with what Dr. Zhou Mi had just talked about. I think trade and the uncertainty definitely has created a lot of concerns about the dollar value. As a matter of fact, dollar depreciates by 10% in the last 6 months, which is one of the largest decline in 6 months' time, right, in the past 50 years. And so that definitely, cast a doubt on how weak dollar is going to continue to go. So now with the shutdown, I think not only it hurts the U.S. economy, right, estimated $15 billion per week with the economic damages, but it also, I think, create a lot of, uncertainties in terms of how exactly the economy is doing, because the government has paused on those data collection and data release. So it's sort of like people are really moving in the dark, not knowing exactly how the economy is going. And so that, again, further adds to the question about, the U.S. economy and the dollar value. And last but not the least, I also think that, with the shutdown and the potential Fed rate cuts, that has to be maybe more aggressive to help the economy. And yet that may, in a way, not only weaken the dollar, because lower interest rate means, your dollar is going to be weaker, but also because the inflationary pressure. Then all of these add up to, again, the concern about the dollar value in the short term and the long term. So I think, with all these and, central banks are buying more to diversify, and the private sector is going to catch up, as we see the ETFs now have already diversify and load up gold in their portfolios. So I think all of these, do put the upward pressure on gold prices and, the downward pressure on some of the U.S. assets.
Well, we're speaking with Yan Liang, Professor of Economics, Willamette University, Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, and also Professor Qu Qiang from Minzu University of China. And that's all the time for this edition of Biz Today. To listen to this episode again or to find more previous episodes, you can download our podcast by searching for Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.